Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature. Looking at the last print of 11/35/50, 25, 20/35, 25, and this last day of the quarter, September 30th, 2011, just right here at support, actually. Tested support both yesterday, and you saw a huge bounce being Thursday. A huge bounce late in the day. Kind of get that window dressing jostling as the big funds seek rather to adjust their portfolios to really look the best. They've been holding the winners, and they don't have any losers. And then of course they'll buy back their losers Monday, in all likelihood, or based on settlement date, maybe over the next few days or what have you. Nevertheless, 35.50 is the last print. We are at support on this Friday, the last day of the month and quarter. It's about 2:30 Eastern time. So if we're going to send out a free informational day trade, you definitely want to be buying the market. If you get this video in the next few minutes, it takes about probably 15 minutes to produce, post-production, maybe 15 minutes. You might get in the next half hour or what have you. You definitely want to be buying here at 35.50. This is definitely tried and true support, as you can see. But having said that, it's going to be a quick move. Our trend, as you can see in this skin, I guess depending on what skin color you have, tone, I need to figure out the name of that color. We had that problem last time. So the color is don't know if it actually it's its own color. So we'll call it maybe one of you guys can write in and let us know what color that is. We call it peach or skin tone or what have you. But there's obviously about 5 different skin tones. Nevertheless, that skin tone measure of trend following support resistance is coming in around 40.42. That's the sell zone. So if you get this video and we bounced off 35 and we're now back at 40, you definitely want to be selling. And these are free informational day trades for educational purposes only. You definitely want to be selling there. It's not a recommendation to buy or sell any securities. But as you can see, there's a monstrous level of support here. So kind of a interesting point to be trading the market. You definitely want to be selling at 40, and if you are selling at 40, if the market's back at 40, we're probably going to go lower. Again, we only have about an hour and a half left, so it'll be a final hour, and things could get interesting. Look at the final hour or so yesterday. So we definitely expect, if we get back here, we're probably going to break this 35 support. We may do it while we're doing this video. Nevertheless, the bears are in total control of the market. We did have bullishness throughout the most of the session yesterday. We had an overwhelming bullish indication. The market was higher. Before we had the gap fill, the market was higher. It was a bit of a bull trap, but we did have some bullish indications. Bullish, bullish, bullish. Obviously extremely bearish. And this indication, these are proprietary indicators, our intraday dynamics, how we seek to gauge where the market is likely to go. Green means the bulls are in control. Red means the bears are in control. Overwhelmingly was the bulls. But as you can see, once we broke the trend, came back a little bit of a sloppy bearish formations right here. But once we had this lower high underside of the trend, it was just off to the races as the bears totally took control of the market. Nevertheless, we did have this early bullish indication. So, the bulls had some powder still left in the keg, and they used that late in the session. Again, right there. But again, we're back at support. That's enough intraday analysis. Full bear, full bear, full bear, full bear. A little bit of bullishness. Again, this indicator is really going against the norm or going against the crowd. Pretty interesting. Nevertheless, those are the trades on an informational day trade perspective. We're going to go ahead and minimize that and look at. Looks like we're looking at the Evo, putting up some nice winners. There you see a beautiful winner right there. We'll go ahead and pull up the. Oh, beautiful, nice, breaking out to new highs. We love our trading models that are breaking out to new highs. These little green dots, green, 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 green. We love breaking out to new highs. If you're breaking out to new highs, you're probably going to go to newer highs and newer highs and newer highs. So we definitely love our models that are breaking out to new highs. We have the active version, not so much. MCM, we're going to look at that in a second. Beautiful new highs. We actually wanted to look at the Evo EM. There you go, right there. A little bit choppier, but breaking out to new highs. Had a trade actually on this day that was a bit of a loser. Gave up. Look at all the profit that was given up on that. Fortunately, on a discretionary basis, on our discretionary accounts, we actually booked our profits there. But in terms of the systems, you really have to let them run. You can't really step in front of your systems, particularly. We're going to go ahead and minimize that. So we're looking at a chart of the daily. There we go. So there's a daily chart of the market. This is the S&P 500 cash market, and just keeps getting more and more interesting. This is definitely a trader's market. All in all, we're very likely to move to considerably new lows. You've begun to hear that the technical damage that was levied, I'm not sure. Well, I know it was not as severe. It was more severe than the late September '08 technical damage and the early 2010 technical damage. The technical damage done by this, in fact, we can look at. Let's look at a weekly anyway of the spiders, and we can scroll back. So there you go. So you're looking at the weekly. This was actually '08. So we need to switch that over to a monthly and see what we have. So I take that back. I do take that back. So the technical damage in '08 was more severe. And of course, the world was falling apart. Our whole financial system was falling apart. So the technical damage was more severe. And in fact, the only real technical damage that we've got support around 106.53. This is looking at spiders. So we have support around 106.53 in the spiders. We could get down there. The early 2010 aforementioned sell-off was essentially didn't have much room to fall, and that's why we got some support right there. So definitely looking at 1100 to 1065 is some pretty strong support in the S&Ps. We did break down, get the bullish tail reversal, not to close above the high of the bar, but got the bullish tail reversal to close above the midpoint of the bar last month. But this month we've fallen back down. So really a pivotal time in the market. If we get below these levels, we're definitely going to hit 10,000 and probably even lower in pretty short order. Right there. So we're going to go back and look at a daily chart of the market. So this is where it just gets really interesting. We've had the most amazing formations. We've had this triangle formation that was right there. We had this larger triangle wedge formation right here. And as you can see, we've essentially broken down that with the sell-off recently, broken down the triangle formation, came back to retest it the last few days, and now going to the downside. So the bears are in total control on a daily basis. We have been fully bearish. I believe the bearishness came around 1300 or so. I'd have to check that. For our intents and purposes, we use this red line and this blue line from a trend following perspective. So once that was broken, it was definitely bearish. And once the technical, this green line here, the be-all, end-all of trend following significance was broken. I mean, the technical damage. Obviously, you can see what was levied on the market. And as you can see, it is a trading range. We have had a trading range from 1120 to 1220 in the S&P cash market, and the bears are in total control, and we're at the lower end of that range. Will we get a bounce? It's possible. That's why we have our systems. That's why we have about 50 models. We're going to look at a few systems in a second. We just looked at a couple. In fact, we can look at the while we're standing here. So we are and remain fully bearish on the market, and we're back to the short side. Gave up a bit on the MRCM, gave up a bit of the long side profit right there. We were long up to about 840 and had to get reversed right back down here, but of course it's now back in the money on the MRCM. $78,000, $600 average trade net profit. Now that's really what you like to see. Again, green dots is really what you like to see. $80,000. That's just going back to '07, so about 4 or 5 years. Pretty impressive. We did want to take a quick look at the sentiment. We're definitely getting some bullish sentiment. From a contrarian perspective, the equity per call ratio is actually above 1.2, and as you can see right here, it got above 1.2. This is actually, we'll go back a little further. Over here it got above 1.2, but again, this was the '08 sell-off. This was the complete ruination of the American financial system, so you can really extract that. In normal situations, we did get above 1.2 right here, had a nice little pop to the upside. We got above 1.2 again right here on this sell-off, had a nice little pop to the upside, again 1.2 right here. Little bit of trouble until, again, we just get this huge trail all the way up to the upside. Again, 1.2 right here, got a nice little pop. So we're definitely would be expecting a pop of some sort from this analysis. From a contrarian perspective, analyzing sentiment, we definitely would expect the potential going over the last few years, and actually we could even go back further. So we'll actually, we don't have the data, do we? We just go back to '05, and let's go all the way back. See if our white line. So there we go. Is this? Oh, okay. So this is '06, and again, you get above 1.2 there, right there. It's not. Again, it's a little bit. It can be early. What month was this? So this was May of '06, and so it can get a little choppy. We can stay above there for quite some time, actually, at least based on that indication. That's kind of what we expect. Again, we are full all-out bearish on the market, and this looks like it was '07. We got some moves. Again, this just to be clear, this is our free trading model. You can actually trade this model. There you see right there, $127,000, 5 lots, average trading net profit of $4,000, particularly impressive. But we're going to go ahead and move on. So that's a chart of the equity, looking at the equity basis, or the sentiment basis. We looked at the monthly and the daily, or in the weekly cash market in the S&P 500, the SPY, and we're actually looking at the MRSEM, but we've got a few new things to look at as well. We'll go ahead and minimize that. And these are going to be part of our, these have been ongoing for quite some time, actually. Part of our platinum reserve line that's never been offered to the public before. We kind of threw out a 10,000 version, 10,000 K version, and we can actually look at that in a second as well. But as you can see, we're going to pull these up. These are ready for full automation through and to be offered to our clients, the MiniAnalyst.com. So we're looking at, let's go ahead and just look at the performance summaries. 91,000, this is our 30B, $91,000 over the last 9 years and 2 months. 91,000, average trade of $546 is the average trade. There you see green dots at the wazoo. That's beautiful. Only a $6,675 maximum drawdown for the account size required. That's our 30B. We're going to go look at the EVR3, $75,436 average profit over the last 9 years. There's the equity chart for the trading model. Just an absolutely insane. Trades 3 lots, $5,400 maximum drawdown. The ISR, $128,000, $10,000 maximum drawdown, $3,200 average trade net profit. There's a look at the, that's just going back to '08 actually, ISR. ISRD, beautiful. That's going back 10 years right there. New equity highs, screaming to new equity highs. 92,000, 11,000 maximum drawdown, $235 per trade, average trade net profit. EVMCM, beautiful. $15,000 maximum drawdown, but $146,000 in profit. Let's look at the chart. Beautiful. It trades more, so your average trade net profit is going to be lower. $55. That's not particularly impressive. What is impressive is $150,000 over the last 10 years, actually, in continued generation of profit. Of course, these are all non-optimized, non-curve fitted. We wouldn't be in business for 8 years if we did any hypothetical back testing, optimization, curve fitting, whatever the nomenclature is for the optimizing all your trading models. So there's the CBR, looking at $85,200 average trade net profit, maximum drawdown $78.60, 1/10 of the profit over the last 5 years. We're going to look at the chart again, green dots. R30A, again, these have never been offered to the public. These are traded, but through TradeStation directly, and have never been offered to the public in portfolios through trading through Strategy Runner. And so there you have the R30A. Look at that. Amazing. $170,000, $500 average trade net profit. That's again over the last 9 years, 9+ years. There you see right there. Looking at R30B, I believe we already looked at 91,600 or 6,600. So just an amazing opportunity for you guys to get involved. Now this is actually part of our PR 100. This is our PR 100 actually, which we can go ahead and look at. $6,000, 51,000 over the last 9 years. That one's not quite as impressive. Oh wait, it really took off. But $52,700 average trade net profit. So we can go ahead and bring up actually what we were looking at, which is, there we go. So we were looking at our PR 100. So if you take all those models that we just looked at and you compile their performance, this is what you get. And that's the beauty of our firm. The key component of our firm is when we've always hedged, we always provide non-correlated trading models. Because if one trading model is losing money, we hope that another 2 or 3 are making money. So that's kind of what we do, and here's the product that you get from that. After deducting $62,000 in slippage, after deducting $20,000 in commissions, you're left with $818,000 in net profit for the PR 100. And again, this is the part of the Platinum Reserve line that we've not offered. If you're interested in something a little more conservative, that's the 100K version. Then we have the this line, this $10,000 model with $110,000 in net profit, just a $3,800 drawdown. This model trades over the last 9 years, trades 3 contracts, a maximum of 3 contracts. There's your monthly performances. August, $9,000. We've already talked about this. After deducting $30,000 in slippage and commission, you're left over with $111,000. Again, non-optimized, non-curve fitted, non-correlated trading models. And so we're going to go ahead and look over and see how our primaries have been doing. The MSA UDT, I believe, was up 340%. Maybe it's 310 or 20%, 325%. The important point is that we've had a drawdown in the MSA UDT. It's now up just 262.5%. Anytime we have a drawdown of 50 to 100%, we always recommend and advise our clients to add exposure, or if they've been waiting for portfolios to come open, maybe somebody got scared of drawdown or got forced out of drawdown or what have you, then take advantage of the drawdowns. And this is exactly what we've seen. We did it when MSA UDT went up from 150% down to 79. We said this is the time. It went from 79 essentially almost straight up to about 300 and some odd percent. So this is the time to get involved with MSA UDT, the Delta DTS up 228%, MAP DT, Delta DT, the Master up 175%. This is kind of how we've done over the last week. The Q Trader, Q20, actually a derivation of the Q Trader, a $20,000 version, is actually now just entered the top 10. So we have 3 portfolios in the top 10 on Strategy Exchange. The live real-time tracking of about 600 worldwide portfolios. So we have 3 of the top 10 in good company with Systematic Signals is actually another company. We dominate essentially the top 10. And that's kind of how we've done. Monday, few gains, 30% gain for the Master. 6% gain for the Master on Tuesday. Master took off the day on Wednesday. 36% gain for the MSA UDT on Wednesday. Q Trader, that was its turn Thursday. So if you guys have any questions, I think we've covered everything. The daily, go to the website, chat with the support team live, ask an analyst any question you may have about any of your investments, or shoot us an email to admin@MiniAnalyst.com. Hope you enjoyed the video, and we'll see you next week.